The Australian economy just posted a terrible jobs scorecard for the month of December 2023. We had 106,000 full-time jobs go. That's the biggest monthly job loss, excluding COVID, in 30 years. 41,000 part-time jobs were created, creating a net loss of 65,000 jobs in a single month. How concerned should we be? What does this job scorecard actually say? And why didn't the unemployment rate actually increase despite all these people losing their job? Bit strange, hey? What happened in each state? And finally, what does this all mean for interest rates and inflation? If you're interested in getting a run through of the employment market here in Australia and what it means for you as a property investor, definitely keep watching and smash that subscribe button down below. Hi, I'm Reem Syed, founder of Confidence Finance, ex-Treasury economist, and today I help thousands of home buyers and property investors all across the country build, grow, and scale their property investment portfolios. So, the employment market in Australia is coming off astronomical highs. If you imagine us as a plane flying through the sky, we have reached new highs in late 2022, early 2023. Our employment market was off the scale, doing amazing. If you looked at the report card back then, you would be shocked at how good it was. Unemployment rates below 3.5%. Employment numbers so strong that we haven't seen it that good ever before, really. The number of people employed, youth unemployment, women's participation rates, overall participation rates, all very, very strong. Because it was so strong from the post-COVID legacy, we had to increase interest rates. And we had to increase interest rates again and again to actually make a dent from this great starting point that we're in. That is what we've done. And now, a year later, the employment market is clearly slowing down. Nonetheless, if you looked at this individual, the December report card, on its own and didn't factor in the last couple of years, the employment market is still exceptionally healthy. Unemployment rate below 4% is well below our sort of 10-year, 20-year long-term average. It is a very strong unemployment rate. The number of job vacancies is still high, although it's coming down. On almost all metrics, we're still doing okay. But this individual report card is a little concerning. Let's delve into the detail. So part of this employment story is by design. The RBA need employment to weaken from its lofty bases a little bit to actually put downward pressure on inflation. This is particularly important in 2024, where the RBA have noted that their concern is about domestic inflation. What is going on in Australia? There is pent-up demand here in Australia, and we need employment slack to be created to put pressure on those businesses to stop increasing prices. Now, if you imagine you're a coffee store and you're charging $6 for a coffee in your local area, and you start noticing, hey, people are starting to be worried about their jobs. There's all these people who've just been added to the unemployment line who have less income than they did last month, and you start noticing fewer people are buying your coffee at $6. Now you'll think twice about increasing the price to $6.20 or keeping prices at $6. Who pays $6 for coffee anyway? But if you are worried about that scenario, then you stop increasing prices even if you have cost pressures. That is what the RBA need. The RBA need a little bit of an income drop to get domestic inflation down. They mentioned this last year in an off-the-cuff remark where they said dentists and hairdressers are the people to be concerned by. That's domestic-based service inflation occurring in Australia. When fewer people have jobs and people have less income, it's going to put downward pressure on inflation, and as a result, the RBA won't need to increase interest rates much further. Let's get into this report card. So here I have the labour force data for December. I'm looking at this data and you can see the monthly change in employed people, down 65,100 people. But more concerning is 106,000 full-time jobs were gone and 41,400 part-time jobs were created, creating this net change of 65,000. It's concerning because the majority of this is actually created by full-time job losses. We also see that in the monthly hours worked. The monthly hours are down 10 million hours across the Australian economy. So, what is going on here? Why didn't the unemployment rate increase? It was 3.9% last month and it remains at 3.9% today. The reason is the number of people unemployed actually barely moved at all month to month. All these people lost their jobs, all these full-time jobs were lost and taken out of the economy and part-time jobs were created. So 65,000 jobs were essentially lost, but none of those people went onto the unemployment line and claimed welfare benefits. This meant the biggest fall in our participation rate in 35 years, single monthly fall. That has kept our unemployment rate at 3.9%. I've ran the numbers and crunched it out a little bit. It's a little bit complicated here, but if you actually keep the participation rate the same as last month and assume that all of these people who lost their job went on unemployment benefits. Now, that doesn't happen, but if you assume that, then the unemployment rate dramatically increases month on month, roughly in the mid 4% range. That is a big on-month jump, and that would be very, very concerning. It hasn't happened, and it needn't happen because we're entering January. Perhaps those people who lost their jobs will find employment this month, next month, and it won't ever feed through into the unemployed number in Australia. So, if you go through the rest of this report card, you can see unemployment going up steadily, still remaining very, very low. Again, if you look at this, this little period that we're in suggests we have really, really low unemployment, but it is trending upwards. The total number of employed people trending upwards, but now starting to come back down a little bit, obviously reflecting the strength of our employment market in general, but recent weakness. Overall, you can see a whole range of narrative stories that follow the same message. Really strong labour market in total, but weakening recently. Let's go into the state-by-state numbers and work out where are these jobs being lost. Okay, so if you look at this in terms of the seasonally adjusted numbers, you can see that the number of employed people fell in New South Wales by nearly a percentage point in this single month, and in South Australia, 1.3%. The two big drop-offs occurred here. Tasmania had some improvement. Let's look at the participation rate. So the participation rate, the big drop-offs again in New South Wales and South Australia. So on this monthly report card, the two big states of concern would be New South Wales and South Australia, showcasing weakness in their month-on-month change in employment. If that continues repeatedly in multiple data sets, then you probably have a picture as to which states are feeling the brunt of these rate rises and feeling the brunt of the economic slowdown. It's here in the employment data. New South Wales and South Australia suggest weakness in the December month. Don't know if that will continue though. So another thing to look at is this, job vacancies over time. Again, you can see that story that we talked about, the strong employment market in the post-COVID economy. Really, really strong. The number of people, businesses seeking jobs, really, really high. Lots of job vacancies out there. Businesses struggling to get workers, more businesses seeking to hire than workers available to actually hire. Really, really great position to be in if you're an employee. That's where we were. But you can see it's coming down. Since the beginning of 2023, job vacancies have started to come down, and it's coming down at quite a clip now. You can also see state-by-state reporting here. Over time, you can see the number of businesses reporting vacancies coming down a lot in New South Wales, Victoria coming down a lot, Queensland shows some resilience here compared to some of the other states. And the story is pretty much on track everywhere you go. New South Wales has had a big drop-off. WA's had a pretty material drop-off as well. They've got one unusually high number here, but big drop-off as well. So pressure is being taken off the employment market pretty much nationally. Each state is feeling the brunt of this. New South Wales, South Australia suggests that they might be feeling recent brunts, but we need more data sets to actually see what's going on there. Now, with employment data, it comes out every single month. So the data could be noisy. You could have really good readings like we had a couple months ago and really bad readings like we had today. What we like to do as economists, what other economists like to do, is to look at quarterly data. So look at 3 prints together and then average the numbers there rather than look at individual monthly prints. When you do that, you can see the Australian economy is slowing down and Australian employment is slowing down. But at the same time, jobs have been added, roughly 50,000 in the last quarter, and earlier in the year is around 100,000 plus. So fewer jobs are being added, and the population is growing. So the unemployment rate is trending upwards, but albeit at a steady, gliding way, rather than a big step up in unemployment, which would be really, really concerning. Broadly in line with what the RBA want to see, a gentle softening of the Australian economy, and that's filtering through to the data. So what does it mean for interest rates? I think you can all but rule out another interest rate increase. definitely next month, until there's new information or data set that really purports a different story, the RBA's job is done. You can see it in the data. The Australian economy is slowing down. GDP numbers are coming in weak. We are in a per capita recession. The employment story is moving backwards. Interest rates are high. Inflation is about to be with a 3 handle in the next few months as inflation continues to come back down. And that takes the pressure off them to increase interest rates further. You may see further rate cuts overseas, but that doesn't mean rate cuts will come here in Australia anytime soon. None of this purports to rate cuts. The employment story is very, very strong, but it does mean a pretty obvious keep rates as they are. They are working to slow the economy down. And as we continue to transition, hopefully we remain on this glide path back down, gently coming down, and unemployment gently going up. If it remains on this gentle trajectory, the RBA will be happy and will be able to glide through that narrow path that they talked about all last year while maintaining economic growth and bringing inflation under control. So it looks like they may have a chance in achieving that objective. I'd love to hear your thoughts. What are you noticing? One of the best pieces of data is the anecdotal information that you have when you go to the shops and when you go and feel how the economy is functioning. We all live in the economy and we all participate in it. Do you know about job losses? Are you feeling it? Have your friends felt it? What is the mood that you feel at the moment? A lot of that information actually feeds through into this data on delay. So you actually have the best insights as to what is actually happening. Feel it on the ground. Talk to your barista at your coffee store. They'll feel it. Talk to your hairdresser, to your dentist. They'll be able to tell you what's going on and are they experiencing demand falls. Overall, the property market is very healthy. It started off like a house on fire in January 2024. A lot of people are reviewing their portfolios and looking for credit as they're looking to plan for 2024. You can see that in lending data now as well, as more investors seek credit. We're back above those averages and really, really high levels, which suggests that investors are feeling confident about 2024. Leave your thoughts below and definitely hit that subscribe button too.